I'm very happy to announce that we have signed a multi-year deal with Lubrizol and will be their second licensee in India. Before I get into the details of the collaboration, would like to quickly introduce two key members of our team here. Firstly, Vininder Baveja, our Chief Operations Officer. Vininder has joined our family in the last fiscal from Hindustan Unilever, HUL, and has also worked at Eicher before that. Vininder has developed a rich experience of over 17 years in IT and marketing throughout his professional career. At Prince, he is closely working on developing our marketing strategies, strengthening the IT function to ensure that IT department is not just an enabler but a disruptor, as well as improving the efficiency of our supply chain. Secondly, I would want to introduce Mr. Ashok Mehra, who is the VP and National Head of Sales. Ashok has been with us for more than 3 years now and has a total experience of over 30 years in the field of sales and marketing. Ashok has previously worked with organizations like Jaguar and Pidilite, and he knows the building material space in great detail. Now that you know my team, let me give you a perspective on our partnership with Lubrizol. Our relationship with Lubrizol should not be looked at as a normal supplier-consumer transactional relationship. It is a change in the ecosystem for our internal and external stakeholders. Not only does FlowGuard help us provide premium and best-in-class CPV solutions to our value chain, but it also creates an ecosystem where we are able to sell these premium products. This will include rigorous sales team and distributor training programs, which will help us understand what parameters apart from price need to be focused on to market intelligently. Quality and technical parameters will be highlighted to premiumize the selling across the value chain. The confidence of my sales team in product quality and knowledge of product application will be at an all-time high. This is of prime importance and was a major incentive for us to join hands with Lubrizol. We will not just be conducting sales, but we will truly be marketing from now on. We have been emphasizing on our strategy of winning in many Indias as we try to improve our distribution network across urban, semi-urban and rural India. Our diverse distribution network, coupled with our strategically located manufacturing facilities, help us provide the ultimate penetration for our range of Prince FlowGuard Plus products. Our first mover advantage and brand recall in PVC, combined with Lubrizol's brand equity in the Cpvc segment, will help us extend our market leadership from the SWR and Agri segment to the Cpvc segment as well. We will now be a force to reckon with across both the polymers. I also believe that the brand positioning of Lubrizol will have a ripple effect on the rest of the product portfolio as well, and will help us upsell the entire product range in the long term. Selling as premium is not something that can be achieved overnight, nor is it going to be easy. We are betting on ourselves to create long-term value, which is why we have signed a 3-year deal. Also, we believe that this is the right fit at the right time. When I say timing, I mean that in 2 ways. Firstly, from an internal point of view, we have been heavily investing in building a strong professional team, a robust distribution network, and scaled up branding spends over the past 2-3 years. This partnership is at the right time for us in our growth journey to help us reach the next level, not only as a brand, but as an organization. Secondly, from an industry point of view, the organized players currently have very strong tailwinds, not only due to the ongoing market consolidation, but also because of the anti-dumping duty on the Cpvc raw materials. This segment is becoming a big boys game, as essentially 4 players will control the market. I believe that this is the perfect time for premiumization as we look to become a preferred brand amongst brands. Given the above tailwinds, the timing of this partnership demonstrates that our strategy is truly built to adapt. Another advantage of this relationship is that we will now be locally sourcing our products from Lubrizol's production facility in Dahej, Gujarat. This will help us improve our working capital as we will work on just-in-time inventory. This ties up with our overall focus of being practical and disciplined with working capital management and improving the overall quality of the balance sheet. To conclude, I would like to give a perspective on organizational strategy. The partnership with Lubrizol is an important cog in the wheel of an overall long-term strategy. This starts from a series of moves, which includes hiring a brand ambassador 2.5 years ago and ramping up branding investments, capacity expansion in Jaipur in September of last year, raising the growth capital for Telangana facility, which should be operational by next fiscal, the launch of storage tanks in the last quarter, tying up with Tooling Holland last month for better operational efficiencies and superior quality molds, and now partnering with Lubrizol to enhance our brand positioning. It is my strong belief that these series of strategies are component parts of a larger organizational philosophy which will make us reach the next level in the long run. Thank you for your time and mindshare. We can now open the floor for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Maulik Patel from Equirus Securities. Please go ahead.
Thanks for the opportunity and congratulations for the tie-up. Nihar, in your opening comments, you mentioned that you are a second licensee for the Lubrizol in the country. So, who is the first one? Just because we understand there were already 2 licenses in the, and you are the third one.
Yes. So, out of respect for our competitors, we understand that there are going to be 2 licensees and we will be the second licensee. I think we will leave it up to the other players to make their announcements at that time. I think that is the basic respect we can show.
Sure, I understand that. Second question is that you mentioned that the consolidation in the Cpvc market, that there will be 4 players. So what kind of a market share these 4 or 5 players will be commanding right now, if you have any data point, and what they were commanding before this anti-dumping duty came into the picture? So just want to understand how much of the market share has been lost by the other players, including the unorganized, in this last 1 year.
Yeah. So currently, in my estimate, around 60 to 70% of the market should be controlled by the top 4 or 5 players. And I think that has improved significantly. I don't know exactly how much that improvement has been. I think you guys would be better aware than I am actually. But I think currently 60 to 70% is controlled by the top 4-5, which I think should only increase because this duty is there for 5 years.
Sure.
It's only the only direction from here is up.
Okay, I understand. The next question is on this. You mentioned about the premiumization of your entire product portfolio, which with this tie-up it will help us. What I understand that earlier the prints were largely importing the CPVC before this anti-dumping duty came, was largely from the China and South Korea. And in the market, the CPVC from the prints were at a little discount to the other players. So how do you think that the retailers or the consumers will perceive once you start selling this Flowguard brand and you have to start selling it in a premium than what you were doing it earlier? So what's your expectation or the view on this side?
Good morning. This is Ashok Mehra here. So I'll just take this question.
Sure.
So what we have been doing is we have been gradually ramping up our pricing even prior to we started discussing with Lubrizol. So we realized that there was a delta between our pricing and the major players. And we have been working very hard on all fronts, improving our quality, improving our distribution network, as well as ramping up the pricing gradually. And we are happy that even now we have closed the gap considerably. And going forward now with this Lubrizol tie-up, I'm sure we would be right up there.
Okay. And my last question, in what we understand historically, the Lubrizol has made or helping the Indian players like Ashirwad and others in a project business where the Flowguard brand is approved by the consultant and architectures and which. So what is your expectation in which particular side of the business segment, either the project or the retail, where you can see a significant major thrust coming because of your tie-up with the Lubrizol?
So we agree that we have been slightly slow on the project side, and we have been a very, very potent force as far as retail is concerned. Our presence is there all across the country. So this tie-up now helps us leverage this tie-up. We can definitely go ahead, and we are very bullish on the project front as well.
Okay.
And Nihar here, I would just like to add to Ashok's point, is what we have often noticed is that, retail demand is driven by project demand. So once we get that, acceptability with the top developers, top consultants who are anyway using prints, PVC products, be it SWR or other PVC products, now they will also obviously accept our CPVC products because of this tie-up. And a lot of the times the retail demand actually is driven by the project demand. So once we get acceptability in these top sort of prestigious projects, a lot of that is actually, I can use the word contagious for the retail market as well. So once, we get this entry into B2B for CPVC, that will also have a good ripple effect on the retail pool as well.
Okay. I got it. And when is this agreement when you start selling this Flowguard brand, which date? And will this have any impact on the existing inventory which you have been selling for the CPVC?
Yeah. So operationally, we will work towards liquidating existing inventories as soon as possible. I think from October, we will be having our products into the market.
Great. Thanks for answering the questions. Wish you all the good luck.
Thank you, Maulik.
Thank you. The next question is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Neha, first question is for you. What is the size of the CPVC market right now? And would we have any numbers on what the historical growth rate has been in volume terms for CPVC versus PVC?
So should be around 3,500 to 4,500 market, 4,500 crore market in our estimates. I think over the past, there has been a very healthy double-digit CAGR over the past 4 or 5 years. But I think my estimate should be anywhere between 3,500 to 4,500 crore market.
Okay. And in volume terms, any indication on how much would be the growth rates? Basically, like 7%. Is it higher than PVC? How should one look at it to better understand it?
Yeah. So from a directional thought process, from a percentage point of view, I think it would be the highest growth rate across all polymers. The base also is pretty small compared to PVC, but it has been the fastest growing polymer in percentage terms year on year over the past 3 or 4 years.
Okay. Now, I think on the press interview yesterday, in the media interview yesterday, you did indicate that 20% of our revenues, it comes from Cpvc. Is that number right?
Yes, approximately 20%.
Right. So if one goes by that math, roughly the Cpvc for us would be 320 crores, 327 crores on FY20 numbers. And assuming that the market size is, say, 3,500 crores, one would imply that our market share would be around 16-17%. How should one look at it?
No, I think market share should be around 10-12% in my eyes. If we are doing around 350 crores and it's a 3,500 crore market, roughly around 10%.
Okay. My second question is on how does the pricing mechanism work with Lubrizol? Does it put us in an advantageous situation because we are associated with the name Flowguard? But how the local markets work is most of the other larger players, they do revise their pricing pretty frequently on a weekly or fortnightly basis. What I'm trying to understand is whatever we procure from Lubrizol, we will have to carry a certain inventory. Is that cost fixed for a month, 2 months? What is the frequency with which Lubrizol changes its prices? And consequently, that will decide our ability to change the prices in the marketplace.
So Ritesh, I think there has been a misunderstanding on your part. I don't think CPVC prices change weekly or fortnightly. That is not the case. That is the case for PVC. But CPVC is, very rarely do the prices change. It would be, if there is like a big impact, like when the duty came in, or when there was a significant depreciation of the rupee, is when a large part of that cost is transferred. But CPVC is not like PVC at all. PVC would be a fortnightly or a monthly change. CPVC would change, it would be very, very infrequent. I can't even put a time period to it. But that's not how the CPVC market works.
Correct.
Yeah.
But for how long do our prices get locked? So we procure material from Lubrizol. It's a function of that, and basically if we stock it up for 15 days or 30 days, that is how we lock our prices?
No, we will not share such information. It is contractual and confidential. But all my limited point is that it's an event-based changing in pricing for the entire market. And with Flowguard coming in, I would want to just impress this on everyone that definitely it's a premium compound, and that is why we have signed a 3-year deal. It enhances our ability to premiumize our end product and upsell, and makes it easier for us to transfer that pricing to the market over a long term. That's how the pricing mechanism will work.
Okay. And are there any minimum volume offtake commitments that we have? How does it work?
I will stay away from giving contractual details. I'm sure you can appreciate the confidentiality.
Sure. And just last question, you made a very interesting point on upselling the entire product range. I would like to hear it from Mr. Virendraji and Ashokji on how they plan to do it going forward, given they have come from HUL, Jacquard and Petit. So there's a lot of variables that can be touched upon. So some initial thoughts from there will be quite useful over here.
So we have been working on all fronts in terms of upselling our product range, and that can be, I think it would be visible in terms of the profits that we see in the results. It's a process which I am again repeating, it's a process which we decided on since the last year or so, and we have been working on all fronts. Again, improvement in terms of the product quality, in terms of distribution network, in terms of pricing, in terms of our promotions. So it's all put together, and we have been pretty successful in that.
Yeah. Hi, Vininder here. Just to add to what Mr. Ashok called out, in terms of our product mix, we are also trying to focus on how we are building on the strategy of winning in many Indias by doing some intelligent selling. And that has been one of my key mandates here coming from Unilever, that how do we get the visibility for the go-to market and our route to market across my channel partners. And the more visibility I get there, it helps me to understand how my channel partner is further selling and how we as an organization can help them grow more, and giving power in the hands of the salesman to be able to do some intelligent selling basis the topography of that state, that region, that market. So that kind of working we have already triggered.
Sir, have you already put in new IT systems over here?
So we are in process. It's an ongoing process, yeah. But clearly, we as an organization would want to embrace the new technologies, which includes things like artificial intelligence and machine learning, which really helps to upsell and cross-sell. And that's our long-term vision as well.
That's quite useful. Thank you so much for the answers, and good luck.
Thank you, Ritesh.
Thank you. The next question is from the line of Madhav Mehta from Fidelity Investment. Please go ahead.
Yeah, hi, good morning. My question was, once the Lubrizol, flow guard pipes, we start selling it in the market, do our gross margins that we were making earlier on Cpvc versus what happens with the flow guard, does it increase or does it stay the same? I'm assuming the cost of the compound that we buy would be more expensive versus what we were sourcing earlier. So if you could just talk to that.
Yes, Madhav. Yeah, that's a good question. There's definitely an increase in cost because it's a branded compound. It's a well-known compound. It comes with its advantages of being accepted as the best-in-class CPVC, especially in the B2B space. So there would definitely be an increase in the cost once we start procuring from Lubrizol next month, and that is why it's a long-term deal where we will be passing it on to the market over the long term, and that will happen over the coming quarters depending on how we are able to work with the forces of demand and supply and the acceptability of the product as well. And that's the reason even my opening remarks have stated that it's a change in the ecosystem. It's something that is not going to happen overnight because there will be rigorous training of the sales force, of the distributors. And, I want to be candid with everyone here. We have been a value-focused company. And this is a change in not only strategy, but also philosophy. And we are, betting on ourselves through this deal in the long term to create long-term value. Why can't Prince be premium today? And, through distributor training, sales training, and many other investments into branding and promotional activities, we will be a premium product in the market. And I would also like to add, this will help us improve our contribution of CPVC to the top line, which in turn will improve, margins as a result of product mix. And the more CPVC market that I am able to capture, that I am able to penetrate, my average monthly sales will also increase, which will also have its operating leverage benefits. So I would like to look at bottom line not only as a function of, pricing, but also product mix as well as operating leverage benefits.
Okay, understood. So, if I understand right, initially the cost of sourcing the compound obviously goes up as we are buying from Lubrizol, but the process of increasing the prices of Prince flow guard CPVC pipes in the market will take some time basically. So our gross margins might take a short-term impact, but they sort of improve over the long term. Is that the right way to think?
Perfect.
Okay, understood. And one other question that I had was the larger pipe brands in India, likes of whoever have been associated with Lubrizol in the past, any learnings from them sort of having doing their own compounds or buying from somewhere else? Like any learnings that we have from there now that we are tying up with Lubrizol?
Absolutely. I think that's a great question. I think one of the things that we definitely as an organization are really excited about is we have a lot of benchmarks within the industry, a lot of quality organizations and brands, and we learn from each brand and organization. And I will give you a more specific answer here. Is that a lot of brands have done a good job of being able to upsell, of taking that journey from being a value-focused brand to now being a premium brand. And the reason, as far as doing this deal or learning is the biggest incentive for me to join hands with Lubrizol when that opportunity came knocking on our door was the external tailwinds that are going on. I think with the duty coming in, it's going to be a very consolidated market, and it is the time to become a preferred brand amongst brands. And the way you can do that is you can't just tie hands with Lubrizol and expect an overnight miracle of improving your CPVC sales. I think there are enough and more examples of success stories in the market. It has to be one component part of a larger strategy at place. It has to be combined with investments into branding, into improving the distribution network, which is always an ongoing process. We always talk about how strong our distribution at Prince is and how robust our distribution network today is. But I am not happy with our distribution network today. I think there is a lot of white spaces in our distribution network. We are hungry for more and we want to improve our distribution network. We need to not look at branding only as expenditure. It has to be an investment. It has to be a long-term strategy. It can't just be like, oh, I'm having, a couple of bad quarters of business, I'm going to, cut off branding expenditures. You have to look at it as a long-term strategy and be very disciplined and committed to investing in branding. So the biggest learning is I can't look at this as in a vacuum and just say that now I've tied hands with Lubrizol, everything is going to be, perfect and it's going to be magical. I think it has to be one part of a larger strategy in place, and those dots have to connect, and only then will this, actually be successful. I think also the tie-up with Tooling Holland was actually a precursor to this tie-up, which will not only do we have the best compound and raw material, but we also have a significant amount of technical expertise as far as molding and quality of our products is concerned. So I think it's important to have these series of strategies to make one large organizational strategy.
Maybe I think another way to ask that question would be, why did the previous organization sort of move on from Lubrizol is what I wanted to understand.
Again, so I will go back to, of course, I don't want to name any names, but I understand your question. I can appreciate why you're asking that. I think it all comes back to timing. I think there are certain moves that were made at certain times in the industry. So if I can again give you a directional thought process, CPVC in India, started off as a very niche product, where there was obviously it was scarcity of supply. Then that graph moved towards an abundance of supply with China and Korea, with cheaper material coming in and CPVC becoming commoditized. So at that time, whether premiumization was that easy or was it easier to buy lower cost material. And but now with the anti-dumping duty coming in, it is that we are going back. The way I see this is that we are going back 8 to 10 years to that previous mode where there is scarcity of supply. There is not an abundance of cheap material flowing from China and Korea. So that is the reason this timing makes sense, and it may not be the same as why organizations have left in the past.
Got it. Good. And if I can ask one last question, if we think about the retail market for CPVC in India, is Flowguard the brand that a customer or the plumber asks for, or would it be Prince? Or I just want to understand like what sells more, what's the selling point at the retail touch point?
Yeah. So I think definitely, see, as far as B2B is concerned, I think Flowguard is undisputed market leader. As far as retail is concerned, there are some quality conscious markets, be it metros, be it certain zones of the country, where people definitely will get, the end, who is the decision maker in this value chain or the influencer is the plumber. So the plumber definitely has a very high regard, very high acceptability for the brand Flowguard, especially in certain markets. And why we are bullish on this synergy is because in a lot of markets, Prince already is a top 1 or 2 brand in the PVC segment. So that coupled with the acceptability of Flowguard will really make us a force to reckon with. I think it's a combination basically.
Got it. Okay, thanks a lot. Okay.
Thank you. The next question is from the line of Bhargav Buddhadev from Kotak Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. Is it fair to say that our CPVC market presently will be primarily north and west? And if this is correct, then post this tie-up, does this change materially?
Yes, so we are definitely strong in north and west India. I think east is one of our fastest growing zones, and we are looking at doing range selling there. I think we've got a good penetration for PVC over the past 1 or 2 years. And we definitely are looking towards improving our CPVC market share there. And South India, of course, is one of the, has the highest acceptability for CPVC. And that we will improve our market share in the South as well. But I think first focus will be to fortify our CPVC market in North, West and East where we are strong today.
Just to add to what Neha said, South has the maximum acceptability towards Flowguard as well. So we are banking on that, and definitely we are going to improve our share in the South.
Secondly, in terms of finished goods pricing, so essentially, does Lubrizol have any call in terms of what we price in terms of our finished products, or the pricing is left to us essentially?
No, see, Lubrizol is an MNC, and they are very, I think they have a very strong view towards, antitrust or anti-competitive behavior. I don't, it will be Prince making the call. Prince will be taking the decision. The remote is in our hand. And I think we ourselves are keen to be premium. Otherwise, we would be happy to continue sourcing generic resin and selling at a certain rate. But we are keen to premiumize. But to answer your question, we are the decision makers on all pricing of our products.
Okay, so tomorrow if we want to sell at a discount to say Ashirwad in South India, we are free to sell.
I mean, we want to be a premium brand, but the Prince Pipes is going to be the decision maker of the pricing of our products.
Secondly, are we looking at this tie-up from a 3-year perspective, or sort of we are looking at this from sort of a long-term arrangement?
Long-term.
Okay. So so why only a 3-year arrangement? I mean, any rationale on that part?
Yeah. So there is, there is an ability to renew further. I don't want to, get into the contractual details, but we do have the flexibility for further renewal.
And lastly, is it possible to sort of know what has been the share of Lubrizol in the CPVC project market?
So we cannot quantify, but we could give you a qualitative thought process. I think whatever, consultants or developers we have been meeting, I think it is unequivocal, it's an undisputed leader. And it's just that with the Flowguard name, you get an automatic sort of walk-in to the most prestigious projects in Bombay, Gurgaon, Bangalore, Hyderabad, Chennai, it's a walk-in, and it's an undisputed market leader. But we would not have specific numbers.
Okay. Thank you very much, and all the very best.
Thanks, Bhargav.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss. Please go ahead.
Hi, good morning, and thanks a lot for taking the question. My question is actually pertaining to, so as you rightly said, it's a 3-year contract. So firstly, wanted to understand what have been the contracts with the previous companies, like for example, if Analysts or Ashirvad, how many year contracts do they have? And is it something exceptional to us, or is it a common phenomena that you have a 3-year contract and you started renewing it?
Thanks, Sneha. I'm not sure of what the other contractual arrangements are. I'm not sure about what other organizations have done, but I'm very clear that we are not looking, while the contract says 3 years, we are definitely looking at this as an absolute long-term arrangement. This just gives us additional flexibility. But you can't always go by what the contract says. The contract is one thing, but it's more to do with the way we are thinking, the way Lubrizol is thinking, and I think that is very clear that we have our wavelength match, that we are doing this for the long term, and we don't want to take any impulsive short term decisions. So eyes are definitely on long term value creation, and both the organizations are aligned. And especially as an entrepreneur or even as a third generation entrepreneur, we are thinking on a 10-15 year horizon as far as any strategy is concerned. So while the contract says 3 years, both the organizations are keen to make this a long term partnership.
Sure, got that. Secondly, my question was more pertaining to the FlowGuard brand. So, of course, a tie-up actually brings this FlowGuard brand into picture, and it has already been associated with names like Astral or Finolex in the past. What do you feel that, you adding this brand, how much value now it can add, and what's the value you still perceive? Because, frankly, I just want to understand your opinion. How does the market look at? Because FlowGuard brand has changed multiple brands as of now. So how does it being perceived in the market?
Yeah, I think perception, marketing is about perception. I think when we, before signing the deal, we understood the intent of Lubrizol. And it's to, create that stronger brand perception. They will be further, making investments into the brand in India. For us, what was exciting was B2B. We are nowhere in B2B today. That's a very unexplored market for us as far as Cpvc is concerned. And this gives us an absolute walk-in to those projects. So in terms of opportunity or market potential, that was one, key immediate sort of low-hanging fruit that we can definitely attack. And as far as B2C is concerned, is a lot of top dealers and distributors where we have strong, penetration, who are already selling Prince products for PVC. But it is for CPVC because, certain other organizations obviously have a first mover advantage there. The way we do in PVC, they were, maybe not accepting our CPVC as much. But now with this, brand equity of FlowGuard, there is no reason why, our CPVC also will not be accepted. And to add to that, I will also be, again, I want to be candid. It's no secret that Prince used to procure our raw materials from Korea and China before the duty. We were a value-focused player where definitely the quality coming in from Korea and China was not as good as other polymers. And the way it's not a secret with anyone, even my sales team knew that. And maybe their confidence, or I know for a fact their confidence was not that high when they knew that we are, maybe not buying the best compound or the best raw material there. And for me, what it boils down to is the confidence of my sales team when he is at a retailer or at a distributor or at a project site, convincing, a key stakeholder to buy a CPVC product of Prince, who are already buying my PVC products. And with this coming in, I think the sales team confidence, the channel partner confidence, we have already done some interactions, and it is at an all-time high. to replicate our success story in PVC, in CPVC as well.
So, Neha, just to add on to this point on acceptability, on a lighter note, our phones have not stopped ringing since the time we made this announcement. And this is we've been flooded with congratulatory messages, and this has come from quarters which were really unexpected. And a lot of consultants, lot of developers, lot of distributors in the market who were earlier maybe fence-sitters or skeptical, they have all been sending us congratulatory messages. And it's been really a revelation for us as well. We were expecting a good response from the market, but this has been really more than what we expected.
Glad to hear that, sir. We have been one of those well-wishers. So secondly, my last question would be regarding, as you rightly said, it opens up your doors for the project business where you were not present. So just one understanding that we have is your project business involves, a lower margin compared to your, retail segment where you're currently strong at. That's one point. And secondly, as you also mentioned that, of course, tying up with Lubrizol also entails a bit of a premium raw material pricing for you. Of course, you said that some of it you will pass it on. So how do we see margins for the next, coming times? I mean, how much of it could be passed on, or how much of the margin dilution you see in the project business?
Yeah, so I think that's a good point. Definitely, it's again no secret that B2B, obviously, because of the volumes, in any industry, not just the piping industry, there is going to be more pressure. But the way you have to look at project costing from a different point of view, you also have to see the operating leverage benefits that are going to kick in. So definitely, the bigger the volume, the more competitive that you have to be. But that then gives your advantages on the operating leverage front. So that is something that we are very clear. And I would also like to say there are a lot of top developers and consultants with whom it is slow guard or nothing. So we are going to get an entry into that into those markets as well. And of course, while like Ashok said, the initial burst has been very exciting. The value is only going to be created in the long term, because this excitement has to be translated into actual execution, which will take maybe not long term, but at least in the medium term, we will be able to translate that, and which is why it's not just a deal for 1 year or anything like that. We are betting on ourselves in the long term.
Sure, got that. Thanks, Nehar, and thanks all this.
Thank you, Sneha.
Thank you. The next question is from the line of Achal Lohandi from JM Financial. Please go ahead.
Hi, thank you for the opportunity. Now, given your comments with respect to, cost increase, the price increase to be over a period of time, to have a B2B angle, will have better volumes.
Sir, I'm so sorry to interrupt, but your audio is not audible, sir.
Is it better now? Can you hear me now?
You to please speak a bit louder, and if you could speak from the handset, please.
Yeah, can you hear me now? Is it better?
Yes, sir. Thank you.
Okay, so my question is, given the background of, the cost increase will be immediate, while price increase of the end product will happen over a period of time, more B2B and investment into brands and other investments, how do we look at the operating margins? What kind of margin range can we look at over next, let's say, 2 to 3 year perspective at the company level?
So of course, like you said, there are so many variables in play, which makes it, it's a lot of parameters that have to be considered. I think as an organization, we have always been conservative with guiding, any investors to consider like a 12 to 13% EBITDA margin, and we are happy to be conservative with any EBITDA guidances. So I know that I still can understand and appreciate why you're looking for a certain number. So we want to be very conservative, and I think a 12 to 13% margin is what we have demonstrated in the past, and we will continue to stick to that. We are happy to over-deliver.
Right. And is there a risk to this margin, assuming that sales are normal, normal situation is there in the market, and given the way the cost will move, would there be a risk to this 12 to 13% margin expectation, let's say for next 2 to 3 quarters?
So the only risk I see is that if there is a significant adverse impact on the economy at large, and if there is some other major extension of lockdown and we are not able to do our sort of minimum monthly sales, but as long as we are able to achieve our top line and our basic minimum top line, I think a 12% margin is not at risk.
And that kind of normalized sales we've already started seeing from the month of June, July onwards, right? Is that a fair assumption?
Yeah. Let me give you some more color there. So quarter one, I think we did mention in the commentary as well that May was like an 80% recovery. June was like a double-digit value growth that we saw, and a lot of that was obviously due to multiple factors like agri being strong, pent-up demand in housing. I think quarter two, if I look at our performance up to now, it's been a sort of 80% sort of recovery in business. There have been markets that have been going in and out of lockdown. So there is definitely we are not seeing growth. There is a degrowth year on year in the month of July. Of course, August we do have some time left, but we did see like an 80% recovery in July. And what everyone must understand is that August and September were really robust months last year. We are working with a very big base because Q2 of last year we were seeing major of the market consolidation taking place. There was the duty actually was announced, if I'm not wrong, in this quarter last year, which is when there was all the channel was stockpiling the inventory. So we are dealing with a very high base of quarter two. So I would just want to mention that we have seen an 80% recovery in July, and August and September will be key since the base that we are working with is really big.
Understood. And I don't know if you could answer this, but for the Cpvc compound procurement from Lubrizol, is there any minimum guaranteed volumes we have signed up for? And would the cost be initially higher and as scale increases the cost decline, or is the pricing is fairly steady?
Yeah, Achal, I'm sure you can understand we don't want to discuss those details of the contract, and I'm confident you will understand why.
Fair point. And with respect to B2B versus B2C, what is the mix currently for us, and how has it changed in last, let's say, 3 to 5 years?
We are not there in B2B. We were never in B2B. We are not in B2B. I think top down we have always been a retail-oriented brand. A part of that, was definitely to do with acceptability within consultants. We were always seen as a value-focused brand. So B2B since the past 3 years and even today is a very small part of business, which is why we are harping on it so much. Again, we are not expecting any overnight results, but the base in itself is small. So there's a significant amount of low-hanging fruit moving forward over the next 2 to 3 years.
These comments are with respect to only Cpvc segment or the aggregate company level you think?
Cpvc.
No, at the aggregate company. I would like to know at the aggregate company level how much is B2B already, and how do you look at it, let's say next year for the sector?
Yeah, so this is Ashok here. On an aggregate level, we would say it's 80-20. 80 would be retail, 20 would be projects, where projects also trickle down in the retail platform, you can say. So I would put it at 80-20 at this point of time.
So a lot of projects in tier 3, tier 4 are catered through like a big dealer or wholesalers will work with a contractor to do like a G+3, G+4 sort of building. So that does not register as project sales. That is a trickle down sales which we don't have visibility of. So our best estimate would be 15 to 20% would be B2B.
Got it. And just one last question with respect to even earlier we were the market leader for the PPR product, and Cpvc was somewhat lower price than PPR. If you're seeing a pricing improvement in case of Cpvc with the Flowguard brand, do you think there could be a possibility of any cannibalization out there?
So no, we do not see any possibility of cannibalization because there are certain markets where we are selling PPR and we are still strong in those markets. And there have been players in PPR who have been selling at a price much lower than us. And we have seen over a period of time those players not doing that well currently because we have been maintaining our quality in PPR and we have been holding forth as far as those markets are concerned. And we have no intention to replace PPR with Cpvc in those markets.
Okay. Thank you so much, Ashokji and Aniya. Thank you.
Thank you. Thanks, Achal.
Thank you. The next question is from the line of Akash Prabhat from Nippon India Mutual Fund. Please go ahead.
Hi, sir. Most of my questions have already been answered. I just have one query to ask. Here, I see you're trying to keep your Lubrizol contract confidential. So I just want to ask if there is any impact of this deal. Are there any exclusivities in place? Do you foresee any change in sourcing for your B2C products, or is there any change in cost structures because of this deal?
I'm sorry, I missed on the essence of the. Could you please repeat the question?
Your Lubrizol, your new Lubrizol agreement, does it have any sourcing exclusivities which could change your cost structures or your sourcing, your existing sourcing, I mean to say?
Yeah. So it is. We will be buying. I'm sorry.
B2C as well as B2B.
Yes. So as this is at an organization level, every Cpvc pipe coming out of our facilities will be with Flowguard Plus. It is an exclusive arrangement, and like we have mentioned, there is definitely an increase in cost, which we want to be premium, and we will premiumize over the long term. And I just want to also address another question related to the contract that a couple of people have been asking. As far as the minimum offtake is concerned, there is a minimum offtake volume which is well within our reach. So it has been negotiated accordingly, and there is a number, but it is well within reach.
Okay. That is helpful. Thank you.
Thank you. The next question is from the line of Utkarsh Napani from Haitong Research. Please go ahead.
Yeah, hi. I have a few questions to ask. First is what kind of an increase in Cpvc revenue share we are targeting over the next 3 years?
So Ashok is smiling at me. I think there is aggressive increase that we would want to take internally. But as far as guidances are concerned, I will stay away from quantifying that. We definitely want to increase the Cpvc share. I think there is no secret. But it's a fine line because whatever market share increase that we want to do in a sustainable manner. So we not only are looking at market share improvement, we also want to premiumize, which is why I want to harp on, we should not expect any miraculous overnight results. This is going to be over the medium term as we try to sustainably improve market share. But we definitely want to increase our overall contribution of Cpvc to the top line from what it is today at around 20%.
So from 20%, can you give some sense what kind of an annual increase in our revenue share we are looking at? Maybe say 1 to 2% kind of.
Yeah, I think a 1 to 2% increase would definitely be viable.
Okay. And we have talked about premiumization in the CPVC portfolio. So whether this alliance would help us in further reducing the price gap with major brands for non-CPVC portfolio as well?
Absolutely. I think that's something we've been doing for the past 1 or 2 years, brand monetization in PVC. I think the margins speak for themselves, our performance speaks for itself. And there is, in certain markets for certain applications, there is a further gap, which we have identified. And over the medium term, this is definitely going to have a ripple effect on the rest of our portfolio. And the positioning of Prince in itself needs to change, and which will change, and we will make it change.
Okay, a connecting question to this is that like our gross margin stood at 31% in FY20. So now since we are targeting an increase in CPVC revenue share, which commands much higher gross margin over other polymers, and since we are expecting further narrowing of price gap with major brands for non-CPVC as well as CPVC, what kind of a sustainable gross margin we are targeting from FY22 onwards?
So definitely, I think, again, I will stay away from quantifying, but from a directional thought process, there is scope to improve margin not only at EBITDA level, but at gross margin level itself. There is a decent gap that we want to cover, and that we will cover, but we prefer to, we want the numbers to do the talking. And once we deliver the results, I think that will be the best guidance or confidence builder. But if your question is there scope for improvement, there absolutely is. And we are working internally, but we want to be conservative with guidances.
So can we assume that 31% is the base minimum margin which we can think of blocking, and with whatever changes we are anticipating, our gross margin can improve from that level going forward?
Ideally, yes, but given the current business environment, the macros are very uncertain. And like I mentioned previously as well, there is a minimum quarterly sales that we need to do for the operating leverage benefits to kick in. So with the given current uncertainty in macros in this fiscal, giving margin guidances or a minimum margin is not easy. But from FY22, I think 30-31% gross margin is a fair guidance.
Okay, and can you just give us a sense what is your CPVC revenue split by geography wise?
Yeah, again, I'll give you a directional thought process. North and West is a majority of the market, followed by South, and East would be last for CPVC.
Okay, and can you just give some sense that how much we are, what would be the share of South market in CPVC?
We again don't want to give any numbers, but qualitative thought process can be given.
Okay. Thanks a lot. That's it from my side.
Thank you. The next question is from the line of Praveen Sahai from Edelweiss. Please go ahead.
Thank you for taking my question and congratulations for this tie-up, sir. My first question is, you have 6 plants. Do you manufacture or do you plan to manufacture CPVC from all those 6 plants?
No, not from all 6 plants, but we definitely want to have a good footprint in each zone. And I think Telangana coming in by next year will help us improve our service and our timely supplies to our channel partners and the entire supply chain in the South. We will be manufacturing CPVC in the South. Today, the CPVC of South India comes from the other facilities. So that not only means higher freight costs, but it also means that the service levels have a scope for improvement. Already we are manufacturing locally CPVC in North and West, and South is the last part of the puzzle.
Okay, and also this agreement is along with Lubrizol for their just a Gujarat plant, or you can also import from them?
We are a licensee, so there is a flexibility to import if we want to. It's up to the licensee's discretion.
And there is also no geographical restriction as there is another licensee in the market?
No, we are a pan-India player and we are a pan-India licensee.
Okay. And current volume, can you give a CPVC volume of the company right now?
No, I think we have stayed away from quantifying that polymer-wise breakups. I think you can appreciate the competitive intensity that there is. But having said that, CPVC is around 20% contribution in value to top line.
And is it possible to give any, capacity number of Lubrizol plant in the Gujarat?
I'm not sure of those numbers.
Okay, thank you, sir.
I would want to add there that they definitely have given us assurance that there is supply security. Even if we grow at a very high year-on-year rate, there is no uncertainty as far as supply security is concerned for the next few years.
Okay, great. Thank you, sir, and all the best for this time.
Thanks, Praveen.
Thank you. The next question is from the line of Arfad Syed from Reliance Securities. Please go ahead.
Hi, sir.
Hi, Arfad.
Yeah, congrats on tariff, sir. So my question is, let's say you said the total market size of CPVC is close to 4,000 crore. I just want to understand in terms of tons, how much is that, sir?
Rafat, I think there's some disturbance in the background. I have a question for me, guys.
Sure.
Mr. Syed,
Hi, sir. Hello. I'm audible, sir. Yeah, my question is, you said the market size of CPVC is close to 4,000 crore. So I just want to understand in terms of tons, how much that would be, sir?
Should be north of 150 KT.
Okay. Fine, sir. And sir, my second question is, let's say the anti-dumping duty on provision basis has started last year in August. When 6 months it was on a provisional basis, since February it was not for next 5 years. So just want to understand, have you approached Lubrizol earlier also in terms of getting tie-up, or you just started now only?
No, Lubrizol has approached us, and
Okay.
That has been after. It's a one-time thing, and we grabbed the opportunity.
Oh, fine, sir. Thanks. That's it from my side.
Thanks, Arun.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Nehal Shah for closing comments.
Yeah, thank you so much for the time. Nehal, would you want to add as well?
Yeah, just thank you, everyone. I think we have seen a good participation today. Thank you to everyone who has attended for your time and your mind share. And thanks, Nehal and Jigar, for hosting this.
Thank you so much.
Thank you. On behalf of ICICI Securities Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.